Who pays for porn anymore? There's so much free stuff.
Yeah, exactly.
I'm Chuck Black, and this is the Age of Ingenuity, our weekly chronicle of Canada's current innovation economy. And here's what's happening. Canada's fintech investors and startups are complaining that current governmental legislation is preventing them from developing brave new fintech applications, which will revolutionize money. So we're going to take a look at that.
I'm Alan Calder, and I think the real revolution in money is having cash disappear and allowing government to track every single transaction. The more government can track, the more taxes we pay, and we're going to talk about that.
I'm Brian Orlotti, and I understand that we all have secrets we'd like to keep secret. If the governments were willing to give up a few more of their secrets, I'd be more willing to give up some of mine. But I'd also like to remind everyone to like, comment, share, and subscribe to support this vidcast on Patreon and PayPal. Speaking of which, here are the stories we're currently tracking. And our first piece comes from the Financial Post entitled "Refusal to Embrace Open Banking Puts Canada Behind Yet Another Curve" by Kevin Carmichael. Adam Feleski, Chief Executive of Portage Ventures LP, the venture capital arm of Power Corp of Canada, was primed to put his home country on the leading edge of finance at the end of last year. "We're on a mission to build global champions from a Canadian base," Feleski told the TechCrunch website in early December when Portage announced it had raised $427 million for a new fund aimed at digital finance startups. "The majority of that money remains unallocated," Feleski told me this week, "but that could soon change. The social distancing demanded by COVID-19 has sped up the shift to a digital economy, a boon for outfits such as Toronto-based Portage, which specializes in identifying startups that have plans to disrupt finance. The pandemic caused a terrible recession, but anyone focused on digital technology barely noticed."
So what I see here is an article focused on Proprietary Ventures, which is the venture capital arm of Power Corp of Canada. Really big Montreal-based company with a pedigree going back about 100 years. They say they're primed to put Canada on the leading edge of the international open banking revolution, but later on in the article, they blame cautious banks unwilling to share their proprietary banking data with others. And these others include third-party businesses building banking applications, governments, foreign governments, and even direct competitors for the same space. And they blame this problem on the creation of a legal regime which discourages new technology and serves as a barrier to new players entering the market. Do you guys think that's a fair assessment of the situation?
I see that. Sorry, Brian, go ahead.
Oh, okay. I was just going to say that certainly the Big Five banks aren't interested in giving any kind of opening to potential competitors. But also another thing to consider is that open banking, sharing proprietary data with other institutions would probably run afoul of multiple pieces of privacy legislation, PIPEDA, and several others that I can't name off the top of my head. And the banking industry is tightly regulated in that sense of who they can share customer data with.
I would hope so. That would make sense. They should be, though, to be honest. They're very sensitive data they've got.
Well,
and
exactly.
Heavily regulated as well, though. That was my take on it. But,
no, you guys go.
Now, I took the same thing from you did, Chuck, that you're taking the story for real, though. But I feel as if, why would the banks work together for anything? You know, like, this is their customer data they market to them or to us, and they can sell that data if they want. They have it, but that's not the same thing as giving it away for free.
That's a good point. And I mean, one of my old friends from high school, he's a financial advisor with one of the Big Five banks, and he tells me that they zealously, financial advisors zealously compete with each other to gain new clients, and they're very reticent of. They've gotten into fights, physical fights sometimes over sharing of clients, and accusing each other of stealing clients. and also the banks, when you quit or move to another bank, sometimes they will insist on retention of your client base, your list of clients. So it's jealously guarded information.
It's just
Now,
like, yeah,
you
Chuck. I was saying very comparable to, say, political parties then, where the list of people to market to and mooch money off of, though, same deal with banks to market and sell their services to. They're a big deal onto themselves. The data, I meant.
Well, exactly, and also the information can be very valuable, particularly with financial advisors who handle,
Oh, absolutely.
yeah, like high net worth people, rich people, especially. That data is obviously prized more than others.
Yeah, that makes their phone numbers they have in the Rolodex worth a hell of a lot more money than on my Rolodex.
Yeah, that's fair. I also think it's worth noting other industries that depend on information in order to survive, what they did and what happened to them. The music industry started giving away its music for free online, and look what happened to them. And the newspaper industry started giving away its content for free online, and look what happened to them. And the book publishing industry started giving away its data for free online, and well, look what happened to them. I think the banks are well served by protecting their crown jewels dearly.
Well, there we go. Problem solved. Next story.
I also can't help but note, Brian, you talked about physical fights. I keep thinking about Ron Burgundy and his news team fighting against the competitive news teams.
Apparently, in the world of financial advisors, that's not far from the truth sometimes.
Well, they're salesmen, right? That's a gig. They're salespeople selling
Yep.
loans typically.
Yep.
Big money in that loan. And as commissions go, like I used to work in the mortgage business, and there's just so much money in them. Like even the small percentage commission on a giant house is a huge amount of cash flow. It really is. It's worth fighting over.
Oh, wow. I also note that I pulled up the information for the PIPEDA legislation. It says explicitly that personal information can only be used for the purposes for which it was collected.
Yeah.
So it's really hard for banks to give away the information because all the information they've got right now wasn't collected to give away.
Well, was it collected for the purpose of marketing to us and dissecting us as candidates for their services then?
Absolutely, but it wasn't collected to let anybody else do that.
You're right. Well, maybe what's the difference between letting them do it or having some software company they use do it then, and that software company selling that data to someone else?
Actually, the truth is, from our level, nothing. From their level, it's a question of who gets money.
Yeah, exactly. Or the cost. How can we raise these costs of their services higher then?
Yeah.
Well, yeah. Well, and also, like, basically the way the legislation stands, I mean, the only way they would share that data externally is with law enforcement for investigation of criminal activity, money laundering, that kind of thing.
Yeah, that's fair. But I also can't help but note that Canada and especially Toronto has a pretty cool fintech ecosystem with people who want to fund projects and some good companies, some good startups up there looking for money. And how do we maintain this if our legislation is such that it allows the banks to keep their doors locked and not share their information with anyone? What can we do to protect our fintech industry?
Sorry, I was just going to say, well, there's the emergence of new players. For the most prominent that I can think of being Wealthsimple. They were started by a bunch of young people, and now they're a serious competitor to the big banks. Savings accounts, RRSPs, stock trading. Full disclosure, I am a client of theirs. I was recommended them by my buddy who's a financial advisor. They are, fully insured by the CDIC, so your investments are protected. And I have savings with them and an RSP with them.
So you're suggesting that there are fintech startups that are useful and could grow into the world market very effectively that don't necessarily require proprietary information from banks.
Yes.
Fair comment. Fair comment.
Well, that would make sense to me though too. That it wouldn't make sense that you'd have Al, Chuck, and Brian's bank start up and compete with CIBC and demand to have all their info.
This does bring me to my last question, my favorite question. Is this fintech gold rush simply the first step in replacing our existing international financial system based around the US dollar, the petrodollar, some people call it, with a new fiscal regime? This is something that Bank of England Governor Mark Carney talked about back in August, as outlined in the August 23rd, 2019 Financial Times post. Mark Carney calls for global monetary system to replace the dollar. I note that Mark Carney used to be in charge of the Bank of Canada before that. He's a very famous guy. He's a Canadian, and he is strongly advocating for a mixed worldwide reserve currency based upon a number of different currencies in sort of like a picnic basket. And that's something that things like fintech and blockchain could do really well. It's just like the first step to a one world currency.
Chuck, thank you very much for saying that. So I didn't have to say that. That's 100% what I was thinking. It was leaning towards, and it has to be a step. We have to have the common currency all over the world for it to be a world currency. Like the U.S. dollar is collapsing. People are losing their houses over this stuff here, and it's going to collapse. It's just the way the market is working.
It's the pattern of history. When something collapses, people move on to something else.
And something based around a blockchain or a Bitcoin or some other fintech investment or invention is likely to be the future of money. Is that a fair assessment?
Well, I think it is a possible way it could go. It doesn't mean it has to be the future. Yeah. Like, is the gold standard just failing too then? Does that mean gold's not worth what it used to be anymore?
I don't know. I think gold is harder to track, harder to trace. I would prefer a gold standard, to be honest. My understanding of a gold standard is that moving towards it would create substantial initial deflationary pressure, because not a lot of us have gold. So a lot of us can go down to the corner store and use gold to buy something. So there'd be a lot of deflation. Blockchain is supposed to cut out the intermediary deflation phase. So it'd be like Bretton Woods in '73. There would be a couple of glitches in the matrix. Gas would be in short supply for a couple of months, but we get over it fairly quick. And over the long run, nobody would really notice the change.
Who cares then?
Well, yeah, to be fair, I care. The part about cash, I care about, because cash is imminently untraceable. So people don't know everything I bought stuff for over the last 15 or 20 years. People don't know the stupid video games I've spent a lot of my spare time playing. People don't know about my favorite types of porn. People don't know about my political affiliation. And I like that. I think it's a good idea. The state doesn't know. I don't know all that much about the state. If the state was willing to open all its books and tell me who killed Kennedy and tell me about all those things that we're not supposed to know about, I'd be willing to share with them what porn I bought last month.
Chuck, first of all, the guy's name was Lee Harvey Oswald. Yeah, but I agree with privacy is a big deal to me too, though, Chuck. I was just making fun a bit, but privacy is a big deal. 100% it is. Like the track, trace, and database is an Orwellian fear of mine since I can recall reading, since 1984. Yeah. And like it's just going ahead of every step they can take, they'll do it. The tracking is on whatever they can. Everything.
And that's why I think cash will never go away, because there is enough demand for that alternative.
Oh, speaking of the demand for cash, so I went to go to our favorite farmer of disgusting birds, Kentucky Fried Chicken today, and the colonel wouldn't let me go in because I didn't have a mask on.
Ouch.
Yeah, no shit, that fat fuck. So I stared at his wee beady eyes and I said nothing. And I would repeat here. But I just thought, I said, I have a breathing problem though. It's very hard for myself to breathe. I have a condition. He said, we don't care, we're not serving you.
Wow.
They didn't say that, but they need near enough that though.
With respect, I'm sure you'd catch more from the chicken than from the air particles.
Yeah, you're well 100% correct. Yeah. Well, you know what? Now it's going to be, oh, did you hear that chickens have COVID now? So now you have to wear chicken masks when you go in.
What do you think, Brian? I know you don't buy porn. I know you don't do anything untowards or anything bad. I'm told you're a fine, upstanding citizen who can do no wrong. You're a virtual angel.
Whoa.
So what do you think about having every action and financial transaction tracked?
I'm not a fan of it, and I think there's still a place for cash. I don't want people necessarily to know. I mean, I'm not horrified of it in certain contexts. I mean, okay, so you know what kind of books I like. Okay, then you can send me ads for books I do like. Okay, I play some video games. Okay, but you know, when it gets into political leanings and personal and sexual preferences, I mean, there are definitely things that people want to keep to themselves, and I think people should have that option. And as for porn, well, who pays for porn anymore? There's so much free stuff.
Yeah, exactly. Well, you know what? Here's the thing. I've heard someone say one time that if you're getting something for free, it means you are the product.
Well, yeah. I mean, you don't get something for nothing, right?
Yeah. Although I've seen some things online, it seems like someone was getting something for nothing. Just kidding. But you're right about the freedom. You don't have to. But if they can collate and aggregate all the data with each other, the banking info and the porn info and the schooling info, you know, and the work info and your taxing info and everything like that, where you live, like that's where it gets a bit scary though too. It's when they can start preventing you from doing things based on statistics though. When they have the numbers behind it to prove themselves justified on it.
And it opens the door to all kinds of new forms of discrimination, which is a scary prospect. I mean, just like with genetic information and genetic records and medical records and the prospect of genetic discrimination. I mean, it's a scary thought. And our next piece from BetaKit, titled Toronto Tech Venture Deal Count Plummets in Unfortunate First Quarter of 2020 by Isabel Kirkwood. Toronto's tech sector saw $361 million in venture funding over 41 deals in the first quarter of 2020, according to a new ecosystem report by Hockey Stick. Hockey Stick's data is sourced through exclusive partnerships with organizations like the Canadian Venture Capital and Private Equity Association, CVCA, and the National Angel Capital Organization, NACO. Hockey Stick also compiles data from startups using its platform, as well as public data sources. The total venture funding for startups in the Greater Toronto Area in quarter one represents a 25% drop from quarter one 2019 and a 63% drop from the previous quarter. Max Folkins, data analyst and content writer at Hockey Stick, told BetaKit the decline in funding in Q1 could be attributed to the lack of a big deal in the quarter.
It might also be attributed to the fact that the entire country locked down about halfway through March, so we lost the last 15 days of the quarter.
I'd say that's a safe bet.
He doesn't fucking care.
I also think it's worth noting that if we think this is bad, imagine what the Q2 report's going to be like.
Well, I'm sure. Have they planned it already? Then I'm sure. Have they got the whole year written out, the reports?
No, but I think they got the raw data because the second quarter ends in June, right? So they got the raw data, and I would imagine they're compiling it right now and turning it into something useful. The actual report, the venture funding for startups in the Greater Toronto Area, the actual report this article is referencing is actually a pretty good report. It's full of graphics. I'm going to put some of those graphics up on the screen, and they're absolutely wonderful to take a look at. If you click on the ecosystem report, you get to see some of the graphics.
Are you telling Brian, or are you just going to do it?
I'm telling Brian.
Okay.
Click on which graphics?
Oh, and the first paragraph.
Yeah.
The underlined thing that says ecosystem report, if you click on that, it should come out to something.
It does.
And that graphic is absolutely wonderful. That tells the largest deals. It gives the highlights for the quarter. It gives an idea of the overall deal flow. It's a really neat thing. You could scroll down a little bit if you like.
Yeah, I thought that was interesting though. I'm always skeptical of what this data means though. Like I just am always skeptical of this stuff because I don't understand some of it. It's
Yeah.
like the
Uh,
pandemic effect. What the hell is that supposed to mean?
Not yet. It is too early to tell what effect COVID-19 will have on tech financing in the GTA. There was no slowdown based on weekly deal volume, but we expect this to change in Q2. Yeah.
so that absolutely contradicts what I said about the country was shut down for the last 2 weeks.
So are these people not choosing not to acknowledge that, or what?
I don't know. I would venture to say that a lot of those deals were on track before the lockdown. And you know, you work at a venture company firm, you work at a private investor, you work at an IT company. You work at an IT company, Brian. You get to stay home.
Well, yeah. I mean, I'm lucky in that sense because I work in IT and the work that I do can be done remotely. But you know, I certainly know that I understand that a lot of people are not that fortunate.
Yeah, no,
Yeah,
I understand.
that's just myself then, right? Like I myself having, I guess what they would call more of a soft skill than tech would be, of managing people. And not
Yeah,
like that. So, well, there's no people left to manage. So what the hell, right?
yeah.
We can't do anything without the government, so we're fucked anyway.
Yeah. I think it's worth comparing this to the 2019 Canadian Venture Capital Report, which we talked about in one of our earlier episodes. And that report said that Canada was growing on a year-by-year basis, and the deals in 29 were larger and more powerful, and there were more of them than in any previous year. And I'm suggesting that I don't know. They say COVID isn't affecting the deals according to their data, but obviously the deals are down. Imagine what's going to happen in the second quarter.
So their deals are down, and they're saying that they're not down. Brian was 100% right to notice that.
Yeah.
Like whatever they say doesn't matter anyway. Apparently, like I guess it won't be true then. Nor will their plans be. If they're making plans based on their bullshit, it's going to be bullshit planning. They're done. And so they have to have the press releases written now for the garbage they're planning. I'm sure.
I
Seriously.
would say that's part of it. That this organization has to have a growing industry in order for it to sell its data. They have a stake in the game that's related to a positive outcome for the industry. And I've said this several times in this conversation. I look forward to what the Q2 report is. That to me is a reasonable test of their honesty. And
Would anyone care to take a wager on this with me, Chuck, with their honesty? How do you think they'll do, Chuck?
I'll bet $10 on all the numbers are down, but things are still wonderful result for Q2.
Where are you going to find $10?
And those are the stories we're covering this week. As always, the articles we've referenced are listed in the show notes. Keep in touch with us on Facebook, Gab, LinkedIn, Minds, Pinterest, Steemit, and Twitter. Check out other stories we're tracking on our innovation news and upcoming events Scoop It feeds. And remember to like, subscribe, share, and comment on our posts. Your actions will feed the algorithms and bots which help to distribute our stories.
If you'd like to promote your event or your activity, or if you have insights into Canada's current innovation economy, or even if you have more lighting. I just got a power outage here and everything I'm doing is in the dark and everything is being run off batteries. So I hope you don't mind my ruddy complexion. But if you have anything you think might help, please send me an email. I'm at chuck.black@protonmail.com.
And we're currently on YouTube, BitChute, and Vimeo, and hope to be on other platforms soon. If you like the content we create, send money to our Patreon and PayPal accounts. We appreciate your patronage on getting Chuck back to normal color.
And that's all for this week. Check out our comments for insights from associate producer John Pentern. And remember, we'll be back next week with more stories covering our current age of ingenuity.